The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the terrific Thursday, the September 19th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I am absolutely grateful for your presence here. But more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to give us a call at 877-927-6648. Now, if you've got a question but you can't call in, I've got your back. You can send me an email. Send that off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside the Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we start our day with all the U.S. indices trading to the upside. We got the Dow up 345 points, the S&P 83, NASDAQ 480, Russell 35, Sammy's 192, Trendy's 256. Everything's up about 1%, all the way up to 4%, 4% for the semis out there. We got the spot VIX that is trading below its 50-day exponential moving average. It's printing right now at 1671. You've got gold up $9, silver's up 49 cents, light sweet crude up 81 pennies. To the downside, it's natural gas off 2 cents in the 30-year Treasury, down basically about 1 point, printing out at 125.05. Our leaders in the clubhouse to the upside, Asmill Holdings, a 40-point move, 5%. Bank of Montreal, 10%, $36. Monolithic Power Systems, $35, 4%. KLA Corp, $35, 5%. Lam Research, 5%, $36 buckaroonies. To the downside, Murphy USA. Murphy's down $24, about 5%. I can't even pronounce that. But PGNY is down 29%. That's a $7 move. America's Car Mart is down $7, that's 14%, and American Tower down $7, also at 3%. So we got to move. We got movers and shakers out here. Of course, I want to look at what you want to look at. Not much in the way of requests out here, but let's begin our day taking a look at the New York Stock Exchange, that advanced decline oscillator out there. Thought it was handy here. Where'd it go? Where did it go? There we go, right there in front of me all the time. So where are we at? Well, we've got the spot VIX below the 50-day. That's the very bottom panel out there. Spot VIX, by the way, is trading right now at 1668, and the 50 days at 1739. So that's a good setup for the S&P 500. We've got price that is trading just above. When we take a look at the price, I'm referring to the advanced decline oscillator, so sorry about that. We take a look at that oscillator, difference between the 19 to 39 period exponential moving average of the advanced decline line. We are at another new all-time high today as we speak right now in that advanced decline line. But we are in that overbought condition area. Not that the market can't get more overbought, but we are in a period of time where we should begin to see, I'm assuming the market is going to close, up towards its session highs. We'll take a look at an indicator that might help us with that. But if we were to close right about here, it just tells us that over the coming days, net days could be a week or what have you, just depending on how this would resolve itself, we are moving into that overbought territory, at least as of right now. If you get a big sell-off during the day, that would change. So that's what's going on there. We don't need to look at the spot VIX. We've already done that. So what are the other areas to watch? Let's take a look at the apogee, perigee pivot points out here. Wow, crazy. So we're above We're above the parity pivot points for everything. When I say everything, I'm looking at the ES, the NQ, gold, silver, light sweet crude, and the U.S. dollar index. So everything is in really total all-out rally mode. So nothing really for us to pay attention to there. Let's just move on. Where do we want to move on to? So one of the areas that I'm watching today is the DAX. Why are we watching the DAX? So those of you that have been longtime listeners know that, and really we took this from Tom O'Brien, and we just were able to simply prove it by taking a look at the correlation, directional correlation that is, meaning that if the DAX trades higher, the NDX 100 would trade higher out there. So we got a correlation tool. It proves that there's a very direct correlation between those two. Well, the DAX has made a new all-time high today. And if it can close above, and the DAX will close in 29 minutes, or 28 and a half minutes. If the DAX closes above 18,990.78, we're at 18,982 right now. If we close above that, one, is going to negate a topping pattern. Number two, it's going to go ahead and trigger an A to B equals CD pattern to the upside. 2174 would be the initial target. Now, does price have to close above that level today? It doesn't. I'm just saying if it does do that, then we've got an indicator that the DAX wants to rally, even though we're in overbought conditions out here, and that would then suggest that the NDX 100 should do the same. Or the question is this a test and rejection, and the market's getting ready to turn down? We are in that towards that overbought condition. I wish I knew the answer to that question. If I did, I would absolutely share it with you. Yesterday when we were looking for clues inside the market, one of the things that we had turned to was the equal-weighted ETF for the S&P 500. So let's just go back and take a look at that, and then I'll shift us in to take a look at the SPYs as an example. So here we get to those white background charts. One of the things that we noticed yesterday, as you and I were looking for tells in the market, was that the equal-weighted ETF, the RSP, for the S&P 500 had already confirmed an A to B equals CD pattern. It didn't do it yesterday. It did it a couple days ago out there. So that was telling us that this instrument wants to get up towards the 183 level, at least the 183 level. That would be its 1-to-1 A to B equals CD pattern. Now, I say at least, but today is going to become bar number 6. So there's a possibility that next week, early next week, by Wednesday or so, we could see a TD9 count up. But right now, the B point of this pattern, the B point was the trading day of August 30th, which had volume of 4.6 million shares. It was passed with 9 million shares back here on the 18th. It was with 5.4 million shares back on September 17th. So you've got a nice confirmed A to B equals CD. Then what did I share with you? I shared with you my analysis that went back and looked at tops between the RSP and the S&P 500. Thinking that maybe the S&P 500 was a driver, even though I have shared with you many times, it's usually the equal-weighted ETF that's really pointing the true direction. And it turns out, well, that was most certainly the case out here. So that's got an A to B equals CD pattern to the upside. That has been confirmed. How about the SPYs? We're going to take a look at SPYs on a weekly basis in a few minutes to take a look at an A to B equals CD pattern for Hector and Patty. But if we take a look at the SPY out here, the B point of its A to B equals CD pattern, let me just get my cursor out here, is going to be this trading session, the high from August 30th out there. And that high is at 564.20. We're trading well above that right now. The volume on that trading session was 62 million shares. Today so far, in less than 2 hours of trading, 22 million shares. Hey, if we just multiply that times 3, that gets us well above. It gets us equal to or above that 62 million shares. So we could be getting a confirmed A to B equals CD up inside the daily SPY. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at the SPY before we went to that break. It's got the potential to go ahead and confirm A to B equals CD pattern to the upside today. Just depends on where it closes and, but more importantly right now, volume. There's also a new profile that formed yesterday in the SPY. We're trading above that, 565.82. So the SPY is in full breakout mode. Now we are in bar number 7 today. You could get a TD9 count top that forms between tomorrow and next Tuesday out there. The S&P 500, the cash index, it does not have any kind of a topping pattern. We're trading well above its all-time high. Let's pull this back here. So this could also be setting up an A to B equals CD pattern to the upside. In order for it to generate an A to B equals CD pattern, all it needs to really do is close above the high from August 26 out there at 56.51.62. But trading above that all-time high, closing above that, just an additional confirmation of that A to B equals CD pattern out there. So the interesting thing is, one of the interesting things is, if we take a look at the seasonal patterns associated with the S&P 500, we just pull this out here. So that's what we have up on our screen. And I'll just simply start for the last 96 years. And the red line, the vertical line, the vertical line shows us where we're at today. So you can see, whether you look at the very bottom graphic that shows monthly what the typical average returns are, you can see September is just a horrible month. You can see we're also in the middle of what should be moved to the downside. Obviously, it's not behaving. It's not doing that. So how about the last 25 years? Same thing. We should be moving lower into the early part of October. On average, that's what's taking place. How about a 15-year period of time? Same thing. We should be moving lower into the beginning of October. 10-year period of time, same thing. 5 years, now we're going to have 2020 in there. I mean, if I took that out. So I can't find now. How about if we simply just step back? We go to the 96-year period. We take a look at some of the additional options we have. For example, we are in an election year. So we take a look at an election year, where are we supposed to be at? Well, okay, an election year cycle over the last 96 years says, okay, you rally basically into tomorrow. All right? And then we start moving lower. So are we on this pattern? we're making new all-time highs. Obviously, here, this showed that the new all-time high typically came in the early part of September, right around September 3rd. We don't use this to be exact, but this is basically the only pattern that I can identify out here that says, okay, we rally higher and then maybe we start to move a bit lower out there. So, and we are in a presidential cycle, so we will go ahead and keep our eye on that. But otherwise, everything is pointing to a rally. We're going to, again, keep our eye on that DAX at 18,990.78 level. We're at 18,995 right now. Let's see where it closes in 9 minutes from here. Now, Hector had asked about a weekly A to B equals CD pattern. So I'm going to go ahead and switch charts simply because I've got the proper tool for us to draw that. And so let's get over there. And specifically, it's the weekly time frame that Hector and Patty are looking at. Now, what Hector would like to do, and there's nothing wrong with this, he's selected a point of October 23rd out here, the week that began October 23rd, 2023 out there as the A point. The B point that he'd like to use is the week of July 15th, the week that began July 15th in 2024. And then as a C point, a retracement. Now, that retracement there is a 35% retracement. So slightly less than 38.6, which we prefer to get to. But can you use that as an A to B equals CD pattern? Well, first, the B point on this is the traded session began July 15th out there. 255 million shares that week. So the question becomes, and this week right now we're at 169. On a daily basis, I don't know what well, let's find out. On an average daily basis, volume runs typically around about 49, about 50 million shares. So 50 million, let's say we have 50 million tomorrow, another 25 days, 75 million that we add to 169. That gets us to, say, 230, 240 versus 255. So it looks like we're going to have lighter volume if we use that as the A to B equals CD pattern. So can you use that? Sure you can, but kind of like what I was talking about yesterday. My preference is always first, if we're not certain what the right A to B equals CD pattern is to go back and identify what looks like the largest pattern out there. And again, for me, that's pretty easy. Here, I think it's pretty easy for everybody when you look at this chart here. You'd go back to that March 2020 time frame, and that becomes the A point out there. So here's another. So you can have multiple A to B equals CD patterns. You could put both in there. I don't necessarily want to just rely on one, but here you've got an A to B equals CD that gets up to 609.83. And that B point was the B point from the week that began January of 2022. 420 million shares were traded there. It was crossed with 437 million shares. That was the week of January 29th. So you've got to confirm weekly A to B equals CD. This is the larger one. And so really there's no reason to fight the pattern, so to speak out there. So I believe this is the correct A to B equals CD. We could select that October low in 2023. But why would we select that and not select the low from back here on the swing point, in March 20th? And both of those would be right, quite frankly. And that's why, Hector and Patty, I try to go back to either a higher time frame or make sure that you pull the chart back a bit further because and then identify, the prevailing A to B equals CD pattern should one present itself. So you wanted to look at that for the SPY, and also you wanted to look at it for Apple. So let's pull up the Apple charts. Again, we're just focused here on the weekly time frame and really the A to B equals CD patterns. Now here, I'm in complete agreement with you because even if we pull this chart back further, this is the appropriate one. And the appropriate one, at least for the moment, we can even find a larger one, which I will do in a few moments. But the one that Hector and Patty were looking at is the low of January of 2023. That's at 124.17. The high comes in July of 2023. Then we do a retracement down into the period of April of 2024. So there's your A to B equals CD pattern. Price in the case of Apple was able to hit that target, the 1-to-1 at 238.13, actually got up to 237.23, has a bearish reversal candle. That created the sell the D point pattern on a weekly basis. Then what happened? Price pulled back, tested and rejected support, which was the bottom of its profile. At this moment in time, with regard to Apple on a weekly basis, it's trading right into resistance at 228.98. That happens to be the top of that weekly profile. So that's the week. Now, I mentioned that we could look at an even larger one. So if we pull this, we know what we'll do. We'll just simply go to the monthly chart because it should stick out even. Well, maybe, yeah. So here on the monthly chart, I would say coming back into the 2019 time frame would be the appropriate A to B equals CD pattern. So let's take a look at that out here with regard to Apple. Understand it's even longer term price projection level. So I'm using the low from January in 2019. The high that I'm going to use is for my B. Well, I was going to try to use that. It didn't take. There we go. The high is going to be from January 2022, and then the C point is going to be January 2023. Now, this volume on a monthly basis was 2 billion shares. When price crossed over that, it was 1.2. Let's try over here, 1.7, 1.3. So we haven't exceeded that volume, but that doesn't mean that it's not a confirmed A to B equals CD pattern on the upside. And this here is suggesting that on a longer term basis, what Apple wants to do is get up to at least the 271 level. The reason I say at least is because this was a 0.382 retracement. It was actually 39.86 out there. And there, typically what you would see is more than a 1-to-1 A to B equals CD pattern to the upside. So Hector and Patty, those are the A to B equals CD patterns for Apple and for the SPYs. I hope that helps you out. I know you're driving, and you'll probably listen to the recording when you can. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryOG24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryOG24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're going to go take a look at the gold complex area. We had Tom G right in. He wants to take a look at just an analysis of the GDX and the GDXJ, even though he's trading the Nugget and the J Nugget out there. So we're going to start with this. We know about that directional correlation between gold and the GDX out there. So we've got to take a look at what gold is doing. And here, the first thing we know is that last week, is that gold negated a TD9 count top and is trading above its profile resistance at 2570. It's trading above its oscillator and change line as well. So it's in full bullish breakout mode. On a daily time frame, though, it's not in full breakout mode. Why is that, Stevie? Because we had a bearish engulfing candle, a three-river evening star candle formation that went ahead and completed on September the 17th. Just 3 days ago. That sets up the resistance level at the high of that pattern, which is at 2617.40. Not showing the gold chart? Thank you there, Mr. Bill. Much appreciated. Glad you didn't let me get too far down that road because, I would have gone all the way till there was no U-turn. So now we take a look at gold. Let's just back up for a second here. So the first thing we're going to take a look at is the weekly chart here for gold. This is the December contract. You can see the TD9 count from about 5 weeks ago. That was negated last week. We're trading above its oscillator and change line. We're trading above its profile levels. It's in full breakout bullish mode. The daily time frame is not. The daily time frame would get to full bullish breakout mode with the close above the high from September 16th, and that's at 2617.40. That's its Rhodes Momentum Indicator top out there. So that's been tested. We are trading above the top of a new profile that formed. That is also bullish. So first things first, you're looking for long positions inside those two instruments out there. You would love to see gold take out that top. If it doesn't take out that top, we could be looking at some type of retracement, maybe back to 25.65, maybe to 25.24, 25.34. Those would be the profile type areas to be explored. We don't have that signal as we speak just yet, but we do have that top that's in place, and we should pay attention to it. In the case of the weekly time frame chart, for silver, you've got a Rhodes Momentum Indicator top with basically a sideways type consolidation. On the daily time frame, silver has an A to B equals CD pattern to the upside, but in order to get up towards where that would be, which was its TD9 count breakdown level at 3211, it doesn't get right up to that. It's just a bit below that on the A to B equals CD pattern. But in order for that to come to fruition, Tom, you need to see it close above 3158. Now, there's nothing bearish about this. We're just consolidating with inside its daily profile, the bottom of which is 3052, which we explored earlier this morning, and then we explored the high of that, which is at 3158. So good old-fashioned, just a bit of consolidating in between profile support and profile resistance out there. With regard to the GDX now, the GDX is really doing the same thing. It is trading between its profiles that formed 3 days ago. And for the GDX, that support level is at 3903. It resists at 4023. I believe the GDX is waiting for a cue from Goldilocks, and then it will make a determination as to what it might do. Now, on a weekly time frame, the GDX is in bullish mode out there. It had a Rhodes Momentum Indicator. Let me just doubly confirm this. The resistance level would be 39.97. Did we close about that last week? We closed at 40.09. So that negated the Rhodes Momentum Indicator top from a weekly time frame for the GDX. So it's in full breakout mode on the weekly time frame, much like we took a look at gold on a weekly basis, but it's the daily, and it's not the daily GDX. The daily GDX does have a top here, Tom. It's this TD9 count pattern. We're looking at the high from August 20th. That swing point did volume of 21 million shares. We're trading inside it today. We've done about 8.6 million shares, so around a similar type volume. But it's really about its ability to take out that profile, and really more so for gold to do its thing, which is to negate its daily Rhodes Momentum Indicator top out there. Now, if we go take a look at their chart specifically, so I think that probably provides you with the information you were looking for, but nonetheless, it may not. And so Stevie can be thorough out here. Let's go take a look at the GDX chart, see if there's any additional information that I can provide to you. On a monthly basis, which we didn't look at, you can see the A to B equals CD pattern there to the upside. That would require a bearish reversal candle to confirm a top. Otherwise, everything here looks hunky-dory, looks like it wants to rally. So we're getting rally message on the weekly and rally message on the monthly, and it's just a matter of the daily out there. Where do you take a position? When you sold out yesterday and you bought back at the open, you may not have even known it, but what you were doing when you were buying back at the open yesterday or at the close yesterday, you were buying the bottom of support on that daily time frame, that 39.03. So now you've got those numbers on a daily basis to consider. Now that's the GDX. If I look at the GDXJ charts specifically and provide you with profile information there, support would be at 47.34, resistance up at 49.41. And then if we go take a look at the I think that's it. So I think that GDXJ. What about the Nugget? Do I have the Nugget on here? Let me make sure. Yeah. So on NUGT, on the Nugget, your support level would be 48.17, and resistance would be up at the 51 level out there. But I'd really, and Tom, and I imagine you do this, I'd really focus on the GDX chart versus the Nugget or the JNUG charts out there. So I hope that provided you with the information you were looking for. It's always good to hear from you. Thanks for writing in, and we'll look forward to your next request. The next request that came in for Stevie, though, is from Angelo. Angelo wrote in by email. Thanks so much for doing that. VTI is the ticker symbol. Well, that's not it. Let's get to the VTI chart out here. And, let's see here. It's 11:36. Before I go over that, the DAX needed to close above 18,990.78. to go ahead and trigger that A to B equals CD pattern and negate its stop. Its close, 19,002.38. So that, in effect, has happened. Now, the DAX did not close at the high of the day, close to it. I imagine that the NASDAQ will do the same thing out there. Now let's go back to VTI. So I just wanted to share the two. I noticed it was 11:37 on my clock. Here we take a look at VTI, which is VTI. What is VTI? Not that it matters. Vanguard Index Fund Total Stock Market ETF. So this negated a TD9 count top. It's in the process today of trying to form an A to B equals CD pattern. The swing point on this, Angelo, is going to be on a daily basis. It's going to be, let me make sure, 278.53. 278.53. So it doesn't matter. We're going to go ahead and use the high of September 3rd. Now, the volume on that high was 2 million shares. Today, this has done 1.2 million shares. So you're going to have the volume today. So VTI is going to go ahead and confirm an A to B equals CD pattern to the upside. I'll draw that pattern on my other chart while we're about to go to a breakout there. The weekly time frame chart is negating its Rhodes Momentum Indicator top. The monthly chart says, don't get too far ahead on your skis. This will complete a TD9 count top on a monthly basis at month end out there. But right now, the weekly and the daily, they are saying full speed ahead. Steve Rhodes with TFNN. We'll be right back. I'll have that A to B equals CD pattern up on my screen for you. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we've got the charts for VTI, Vanguard Index funds for the total stock market ETF on our screen. Again, that A point is going to be, VIC is going to be down on the low from August the 5th. That's the A point. The B point's up at the high on August the 30th. And that retracement, about a 45% retracement, the low from September 11th. That B point is being passed with volume. We have an initial 1-to-1 price projection of 293.45. Notice that the prices trade along the left side of that C to D leg, stronger move than the A to B. Retracement, only a 46% retracement. Odds favor that this would do more than a 1-to-1 A to B equals CD pattern on the upside. The 1-to-1.272 expansion area is $300.94. So that's what we see right now when we take a look at VTI. Vic, thanks for taking the time to, or Angelo, thanks for taking the time to write in. Much appreciated. I look forward to your next request out there. Mr. Bill would like to take a look at Amazon, so let's switch over to those white background screens. And it looks like Amazon is in an A to B equals CD pattern to the upside out there. And if we take a look at the daily time frame, so it negated its TD9 count top. Let's just draw in this A to B equals CD, see if this gets us up towards that TD9 count breakdown area out there. I believe that it will. Gets up towards that. Yeah, really right towards it. So I would say at this stage here, Mr. Bill, price should go target that 200.27 level. That's a TD9 count breakdown area. Now, the B point was on the trading session of August 21st. Volume there, 35 million shares. It was passed with 42 million shares. So there's your confirmed A to B equals CDT upside in Amazon. I don't see any other kind of topping signal out here. So it should head up to that 200.27. On a weekly time frame, what do we have? We have price trade above screen oscillator and change line. That is a very bullish signal. And trading into the center of its profile, 191.28. So if you're asking why did price pause here, because both buyers and sellers believe Amazon is fairly valued between the range of 181.36 and 201.20 at the 191.28 level. The actual high that we've seen today is 190.99 out there. Not too bad versus 190.91.28. On a monthly basis, you had a TD9 count top. It did its job. It took price back to support, which was the bottom of its profile, 166.91. Found support there. Now it's trading above its green oscillator and change line. Its resistance area, it'll have two. The first will be 195.49, and the second will actually be the TD9 count high at the 201.20 level. Now, it's very possible, Mr. Bill, that Amazon just put in a major bottom out here. Stevie, how could you come up with that? You know, if we take a look at its monthly time frame charts, what we see is we just experienced a 2-bar pullback, a 2-monthly bar pullback out there. 2 to 3 bars in bull markets, that's typically all you get. If you take a look at the Amazon run here from the 2014 time frame, you'll see all those pullbacks were there's 2 or 3 bar pullbacks out here. Now, when we're inside a bearish type market out here, we're starting to head lower. Look, even in this case here, the rally was a 2-month rally out there. So, Mr. Bill, there is a possibility. There's a strong possibility that what Amazon just did last month was made its significant next bottom out there. So that's what I see when I take a look at the Amazon charts. Hope that helps you out. Let's go take a look at our next request. We don't really have many out there. Thank you, Dan, for adding one. Let's go take a look at XBI. This is for Fletch inside the Tiger's Den. So let's get XBI up on our screen out here, see what it is doing. Bar number 7. It looks like taking out some daily swing points. This is the biotech for the S&P 500. Let's start with the larger time frame first if we can. So we'll take a look at XBI on a monthly basis. If this is able to close above the high from the month of February 2024, 103.52. So Fletch, watch that. That had volume, by the way, of 242 million shares. This month we're into it with 90 million shares. Last month, 159. But it doesn't matter. If price closes above that high, and again, that high is 103.52. On a monthly basis, you'll have an A to B equals CD pattern to the upside. So that's the first thing. What's the second thing? The second thing is the weekly time frame chart. What price needs to do in order to generate an A to B equals CD pattern to the upside is close above negate its TD9 count top. Now, it may do that tomorrow. That high is 103.08. We're at 103.32. So it's got the potential. Right, we're trading right up into that. By the way, on a weekly basis, I know you're going to ask me what's the volume. It was 39 million shares on that TD9 count. This week we are into with 34 million shares. So this suggesting that on a weekly basis that you've got the volume to certainly close above profile resistance, to close above that TD9 count top. And if you do that, you're going to get an A to B equals CD pattern to the upside for XBI. Now there is a larger one that is out here as well. And so that's actually the one that we really want to pay attention to. So that high is the week of March 1st back in 2024. 89 million shares were traded then as well. Not as well. So it was 89 million shares. We're not going to be anywhere close to that. But if that would set up a larger A to B equals CD pattern. So I would say that's 103.52. This TD9 count was 103.08. Make it the 103.52 level, Fletch, now that we pulled this chart back. And you get it close above that, you'll have an A to B equals CD pattern to the upside. Where might that give us a price projection? Just for blanks and giggles out here, because we don't have that confirmed just yet, but you could get that tomorrow. It would get you up in the 120-ish type area, a little bit above 120. So that's what the weekly time frame tells us. Let's go see what's going on a daily basis out here. Is it going to be able to, is anything in its way from moving higher? So there is a Rhodes Momentum Indicator top. That took place on the trading day of July 26. That swing point had volume of 8.2 million shares. So far today, we're in it with 6.5. So that's a beautiful thing for you, Fletch. Price is taking on that resistance. And again, that number was at 103.08. We're at 103.33. So if we close above that, that says that we had higher. There's one other area of resistance that you've got to be dealing with here. And that's going to be the high from the trade. This takes us back a while, from February 28, 2024. There was 16 million shares on that day, so that's not a problem for you. The high out there is at 103.52. So 103.52 and 103.08 are the levels. Let's make it 103.52. Fletch, if XBI can clear that level, you're off to the race to the upside. You'll have A to B equals CD patterns out there. But you are also in bar number 7 today. And that says that we could see some kind of a top come between tomorrow and Tuesday out there. But otherwise, XBI looks muy bueno out there. We've got a request to take a look at CELH. No, that wasn't it. It was from BBAI. BBAI, this is for Dan inside the Tiger's Den. So let's see what this is doing. And we'll also go ahead and get to, CELH for Perry inside the den. So we take a look at BBAI, Dan. You've got price trading above its daily profile and oscillator change line. This increases the odds of a further rally. If I look at the weekly time frame chart, the further rally would run into resistance at $1.89. $1.89 is the bottom of its weekly profile. It was tested about 4 weeks ago. We know that's a key resistance area. On the monthly chart, the key resistance area is also at $1.89. So $1.89 is your thorn in your side out there. But the daily is suggesting we should rally further out there, just simply because we are trading above those resistance levels. So did that give you the information you were looking for? Let me just read here. Last spike to high fours, closed most but kept a bit. Looks like it's setting up again. What are your weekly, monthly levels of time permits? Okay, so you've got those weekly levels. And from a support standpoint, Dan, you'd be looking at about the 141 level. On a weekly basis, that's its oscillator and change line. So it does look like it wants to go target that 189 one more time. Steve Rhodes with TFNN. We'll be right back. We're going to close out the show by taking CELH for Perry inside the Tigers Den.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a ticker symbol CELH. This is for Perry inside the Tigers Den. Celsius Holdings out here. So Perry, this has on a daily basis. It formed a nice Rhodes momentum indicator bottom. It went ahead and confirmed that with that nice bullish engulfing candle on September the 9th. And now what price is dealing with here is trading between support and resistance. It's strong support, by the way, meaning that the bottom and the center of its profile are both at 32.37. Your resistance level, which was tested today, was at 34.83. Now today, you could get bar number 8 of a TD9 count. In order for that to happen, price needs to close above 33.69. If it does that, and then tomorrow, price closes above 33.18, on a daily basis, you would get a confirmed TD9 count top. And that could take price back to its oscillator and change line. Basically, it would take it back to at least the bottom of its profile, 32.37. That's what I see there on the daily time frame. Watch for the TD9 count. Watch today's close. If price closes below the level that I gave you, that pattern goes away, and then that would be a different call. If we take a look at the weekly time frame chart, we do not have any kind of a bottom. We're trading below its bullish structured profile. We're trading below a TD9 count pattern. We're trading below its oscillator and change line. CELH is telling us on a weekly basis, Celsius Holdings, that it wants lower price. And that is the message of the monthly time frame chart as well, Perry. Price closed below the bottom of its profile last month. We're trading below last month's low. That's a bearish condition. And that's telling you that CELH could get down to 1277. Not overnight, although it could do it overnight. I'm not saying it's going to do it overnight. But what I am saying is this chart looks relatively bearish to Stevie. So I hope that helps you out. That may not have been the information you were looking for. And for that, I'll apologize. But it is the information that I've got. So to close out the show, what is it that you're going to pay attention to? I would say I'll just go over to my 9-panel screen out there. We'll just simply use that because that's got some identification markers on there. The key level we're watching today inside the ES Mini, in my opinion, is 57.85. You close above that, you've got an A to B equals CD pattern that should come to fruition, 60.12. Spot Fix Index, again, watch that 50-day exponential moving average. That's at 17.39. In the case of the NQ, watch 22.51. You close above that, we've got an A to B equals CD pattern to the upside. Goldilocks, you can watch 26.17.40. That's its Rhodes Momentum Indicator topping signal out there. You close above that, that would be bullish. In silver, you need to close above 31.58. Take care, folks. Have a terrific Thursday. We'll see you tomorrow.